All right, so this is the market outlook for week 45, part 2 or 2 of 2. Let's go ahead and get into it. So on GBP CAD, I'm actually in a trade on this right now. I explained the analysis, but here, let's go over it again. Right now, we are still inside of a bullish run. We have finally solidified this price leg by taking out this internal low. Really, it's this one here, but I guess these two internal lows, and that solidified the price leg, and that led me to seeing opportunities based off of the mitigation of this price gap inside of this candle here after some refinement. I was early on one trade and then caught another conservative opportunity off of the response to some analysis in a candle that I looked at here. So I'm currently in a trade here, looking for a target of this high. Ultimately, I would look for this high, but I'm going to be a little bit more conservative here on this particular trade, and I'm going to target this high here. All right, so overall, GCAD, as I'm seeing it, market analysis is a bullish run. We have not taken out any of the structural points to the low side, so we are still in a bullish run, despite having major consolidation in between the price legs, which is very interesting here. You can see that seems to be a trend here on GCAD. So if you're trading this pair, expect to see some sort of consolidation for a pretty decent amount of time as we start taking out the highs. It could be a sign of transition because price could be slowing down here, but stay to the bias, we're still in a bullish trend. GBP USD, we had broken out of the macro, or the bullish range here, which existed from this low up to this high. Established that once we broke out of the range, we had transitioned from a bullish range into a bearish run. So now we are looking for the end of the bearish run and where it's going to be. Now I have marked out here this area. This is a price gap that I had marked out of, and that was actually based on the 3-day time frame. And I was anticipating or being very aggressive here in saying that price would begin its pullback to solidify the leg here from this high down to wherever this low is. And then once we take out this high, that would be the pullback. I was expecting price to have a response here based off of this 3-hour price gap, refined to something inside of there. And we're having some sort of response here right now. It's to be seen with future price data or future candlesticks. Do we get sustainment of that response and leads us to a pullback or initiates the pullback here? It seems promising as of right now. We're getting a little bit of momentum here. We need to see a few more candles or more and more Mensis candles to push us back higher. But as of right now, we're still in a bearish run. And overall, what I would like to see on GBP USD here is that we end up pulling back, taking out that high, and giving us more opportunities to sell off, aiming for this structural point here. All right, on the NASDAQ, we have officially pulled back or generated a price leg where we have the low here, and then we have the high, which is our all-time high. We pulled back after creating that all-time high, taking out the low of this candle, and then pulled back in to fill this price gap here. So what we're seeing is continuation of this bullish run. So all I'm seeing here is opportunity for price to pull back into discount, in which it did. It could come a little bit lower. I'm not going to, do too much analysis on this for an entry. I'm just going to wait it out because I think I missed opportunity here. But anyway, looking for price to pull back, discount. If you've got opportunities, great, and continue on pushing on higher towards the all-time high. That is the ideal scenario. That's the pro trend analysis. Now, the counter analysis is that this could be there's potential for price to transition from a bullish trend into a bullish range, but we won't know for sure until we take out this structural point and also the low of this current price leg. If we were to take out this structural point here, that would transition us from a bullish trend into a bullish range, in which we, if you remember from previous outlooks, this is the last point the last all-time high before the bullish run. This was the structural point that we would have. So we would potentially have a bullish range if that structural point is broken from this high or from this low all the way to this high, in which we would now be on the deep premium side of this trade, and we would have ample opportunities to take trades down towards filling any inefficient pricing inside of the discount side of this potential range. But right now, that's extrapolation. We want to stick to the current bias. We are locally filling a price leg, balancing a price leg, and expect price to continue taking out all-time highs. The counter analysis is, do we take out the structural point? And if we do, in the form of a break of structure, that will transition us from a bullish run phase into a bullish range phase, in which we'll have opportunities to buy and sell. All right, USD JPY. We are still inside of this range. We're trending higher. The price action actually is sustaining bullish as we move deeper into the premium side of this range. Let me go ahead and get rid of that. All right. Yeah, price is sustaining here in the premium side of the range. We're getting, some sort of resistance here as we press higher, which is to be expected. We're in the premium side of the range, so we should be expecting some sort of selling pressure. But ultimately, we're still waiting for price to, take out some of these highs and reach our areas of interest. And if not, if it fails, to continue higher, well, it's going to pull back into an area of inefficiency to get more fuel to push price higher, right? So until this range is balanced, we can assume that price is going to, still play inside of this range. It's been playing in it for, dang near a year now, it looks like. But yeah, we'll see what happens. All right, on gold, what I'm seeing, and I'm actually currently in a trade right now, is we've transitioned from a bullish run after this consolidation period here. So all of this after consolidation, we transition into a bullish run, generating structural points as we moved higher, creating highs and lows. They're very, very tight highs and lows here, but highs and lows nonetheless. And so that's where you have to be, very diligent in your analysis and seeing that these are highs and lows. So this is trending higher. And then ultimately, the last structural point that was generated, which was here, was broken. And so what I'm seeing here is a potential break of structure, and I'm actually in a trade from here off of a 4-hour sponsored candle that was refined to a 20-minute sponsored candle, and looking for price to continue lower to take out this low. And if it does, that will solidify that we are in a bullish range from this low, which is the structural point here, to the all-time high of gold. And we'll have similar, sentiment or price action or the counter analysis for what I was saying on the NASDAQ. But essentially, this is already played out where we've actually broken the last structural point. So we could be seeing, continuation lower to move into the discount side of the range and start filling in some of this inefficient pricing. All right. Not too much on the Nikkei. I think I'm not really looking at the Nikkei right now. It's not giving, really any opportunities, so I'm going to forego looking at it. I'm going to focus on GCAD since I'm in that trade. Got, gold position as well, and looking at obviously the NASDAQ and then GU and UJ. But as of right now, that's the market analysis for the pairs that I'm currently looking at. Peace.